All right, good day, everyone. You're welcome to Aperture's Academy. Our topic for today is anatomy of candlesticks, right? So basically, you're starting with everyone knows that anything that has to do with technicals, you start with candlestick. Because let's talk a little bit about candlesticks. Candlesticks are the language of the market. It is how the market communicates what it is doing to you as a trader. So it means for you to adequately understand what the market is doing, or for you to interpret what the market is doing, you need to understand its language. And you understanding market's language is basically you understanding candlesticks. So if you don't understand candlestick, you might just find the market confusing, or it might look like jargons because you understand it. So pay attention to candlesticks a lot. Even this doesn't just relate to beginners alone. A lot of pro traders, like big traders, they still find some aspect of candlesticks. Even me also, I'm still learning. You understand? So don't feel like okay, candlestick just swipe. No, it might be the one you need. All right. So we have two types of candlestick basically. Except you've edit your trading view. Whenever you open your trading view at first instance, you see a green candle and a red candle. Yeah, what do they mean? So we have two types of candlestick, and the green candle at default, yeah, the green candle means, or it denotes bullish candle. And what do we mean by this bullish candle? It's bulls. I've explained bullish all these terms in our previous video. So if you still find them confusing, you can just go back there. All right. So bullish candle is a candle that is being owned or that is being formed by the bulls. Who are the bulls? The buyers. Now, what brings about this bull or whatever is whenever a bull wants to fight, it just picks up its opponent and throw it up with the strike with its own, basically. So that is how a bull fights. So that's the mechanism behind calling the buyers the bulls, because when they pick price from whatever the price is, they just pump it, they push it up. All right. So the second type of candlestick we have is the red, which simply means or which tells us the BS. So the red signifies the BS, the green signifies the bulls, the bullish candlesticks. So bears, whenever a bear wants to attack its own opponent or its own prey, just eats them to the ground, right? So that's the system of what brings about calling the sellers. Sellers are who we call bears. That's what brings up that name for them. Do you get that? So anyone that throws the market from wherever it is and dump it is what we call the bears. Do you get that? All right. So now let's show it in diagram. So I'll be using this to label a candlestick. Of course, I'll be drawing two, signifying the green candle and the bearish candle. So this will represent the bull, which is in green color. Let me use that dark one. Okay, which one is dark? Yeah, good. So then I'll paint this red to denote let's do this way. Yeah. So I'll put this red to denote the bearish candle. All right, good. So now pay attention. I want to explain how these candlesticks form, and then we do the labeling. So this line I'll be drawing, take it as the starting point of this candlestick. That is where this candle wants to start. For instance, let's say the market is currently at this zone when you open your trading view, and then for you to know, okay, will this next candle, what will make it a green? What will make it a bullish candle? What will make it a bearish candle? There's a way. And that brings us into labeling it and how to recognize them. So if a candle should open, remember I said this line, this black line here is our starting point, the entry. So if a candle should open from wherever it opens like this and go up like this and close above where it opens, it signifies that that candle is a bullish candle. I want you to take note of the definition. If a candle should close above where it opens, that signifies a bullish candle. And if a candle should open here, the candle should open at this place, then come down, it signifies what? A bearish candle. So it means a bearish candle is a candle that closes below where it opens, while a bullish above, below. Get that difference. Now, meaning, let's label it gradually. Meaning this is what we call close, and this is what we call open. So I'll be using this open for both. For this green and the red, it stands for both. That's our open. And this is the close for the red candle also. All right, good. So now we've labeled the open and close. Now there's another thing we will label in this candle. It is called the body and the wick. Now what do we call wick? Some people call it wick, some persons call it shadow, whichever name it is. I think wick is kind of more popular. So this is how wicks form. Wick is that thin line. You see it in the middle or whatever of the candlestick like this. I'll explain how it forms for us. You get to see it. So that this is wick. Now how do this wick form? Let's say this candle. Let's say this candle open here. But before it come down to form the bearish, of course, I think we already know that whatever pulls the market down here is the handwork of the bears, and whatever pulls this candle up here is the handwork of the bulls. Like I explained in the beginning, bullish up, bearish down. Don't forget. So it means that this is how we form, right? This market open here, but the bulls first of all push it up to this extent before the bears now drag it down back. Do we get that? Before the bears now drag it down. So what we tell you that, okay, this candle or this candle before it's closed, it got to this extent. That is, the bulls drag it to this extent before it comes back, is the wick that you see there. So when it crosses the open, then it becomes a wick. It becomes a wick. That is how we form. And just the same thing here also. What creates this wick is that it means that it means the sellers drag it down here, but the bulls drag it back to this extent before this candle now close. Now what determines when a candle closes is time frame. Now if you look at this section of my screen, you get to see MW. Let me even click this to show everything. Yeah, you get to see these are the time frames, starting from seconds, minutes. Basically, the ones you need are from minutes to hours, or to daily and to weekly, monthly. Yeah, to do your top-down analysis. So these are the time frame. So this time frame is the duration, that guide, or that period when each candle will open and close. What do we mean? It means on 4 hours, every candle you see there will take 4 hours to open and close. If you go down to 1 hour, it means every candle on that time frame will take 1 hour to open and close. On the same pair. Do we get that? The same pair. So that is, I believe we now get what's called wick. Wick is just like telling you, okay, these people drag it. This candle got here. in the, when it was forming, just like I do call them gossiper, that's like weak. Just tell you, okay, they drag this candle here before they drag it down. These people drag it down before they drag it up. And of course, you know who is behind dragging up or dragging down already. So for this bullish candle, it's the same thing. It means, let's say it's open here, but before it goes up, before the bulls take over, the bears drag it down a little to this extent. So what tells you that it has gotten to this extent before the bulls make it cross the entry, then it turns bullish again, is what? Weak. So, and that should tell you that when it first of all crosses this entry down, it will be in red color. So it will turn green when it crosses this open, this entry, this open, whatever I call it, wherever it starts to open. I'm not saying that this line I draw is the general open time or open zone for every candle. No. Where the last candle stops, the next candle will open at that zone or at that place. And you already know what guides the period a candle will spend to form. You already know that, which is time frame. So when this candle stretch up, it turns green. Yeah, it turns green. And that is basically how candlesticks form. That's how we have our red and we have our green. So I believe now you should be able to label these things and make a good meaning out of it. So now, the other labeling that we'll be doing is this actual body that is colored is what we call body of the candlestick. Body. All right, you should be able to see that clear now. And like I said earlier, this thin line is what we call what? Weak or shadow. I know what you call it. Weak or shadow. So same labeling for this. So you should have this in your notes already. And of course, if you're a total newbie or whichever level you are on, ensure you have a note that you jot these things down and study. You need a personal study time. I won't lie to you. As a trader, you must embrace studying on your own. On your own. Look at it on your own. Now let's go on the rule chart to see example. True. Now look at this. Look at this. Let me zoom in properly. All right. So you can see what's happening here. This is the what's it called? This is the open zone. This is the open zone. So when the market crosses it to the upside, that is why it ends in green. Why is this candlestick? Because currently we're on a Friday. I mean, we're on the Saturday. Yeah. So that is when I'm recording this video, and the market is closed. Of course, that is why the market is not moving, and that is why this candle is just like this. So it means when the next candle will open now, it will open where this one closed, which is this. Just start from here and go whichever way it wants to go. Sorry about that. Just go whichever way it wants to go. And either it is the bulls that are in control of the bears, that's what we decide where the candle will go. And I believe you can just see, look at this candle we were selling. What caused this week was because when the candle opened here, this is the open, right? This is the open. And this is the close of this red candle. So it means the bulls now drag it up here first. That is what caused this long wick before the bears now drag it down back. So immediately it crosses this open, then it turns red like this. It turns red. And what caused this wick is that the bears also drag it to this extent. Then the bulls do what? They drag it back up before it's now closed here. And you can see immediately it closed here. What happened? that is the same place. That's the open of this next green candle. You can see the open here. And this one did not even create any wick. It just start pumping up. That is why we have what? That is why we have this green candle. So it closes, this one closes above where it opens. That is why you can see the color green. And for the red one, it closes below where it opens. That is why it is in green color. So I believe we now get the explanation and how these candlesticks work. So ensure you practicalize this. And if there's any question that is not clear, you just drop it in the comment section. I will attend to them. So if you paid attention and you watch it up to this level, comment candlesticks in the comment section, so I will know you really paid attention and you watch it to this level. So see you in the next one. Bye.